Okay, well, welcome everybody to this month's client support webinar. My name is Bennett McDowell with TradersCoach.com, and today is October 15th, 2025. Hope everybody's doing great. All right, before I begin, Jean, any announcements?
Happy to see everyone here. And I was just mentioning actually to Alexander that you'll be going over a little bit on how to access the various free items in your VIP membership area and
Okay.
also in the Discord area. So that's pretty much about it. Back to you.
Okay, great. Yeah, I want to go over that because Discord can be a little confusing to some people, especially if they're not new on they're new on how to use it. Usually, the younger generation uses it for gaming, and then it kind of bleeded over into companies using it as a place to post their products and services and educational material. So that's kind of what we use it for, and I will show you how to get around that in just a moment. Also, too, let me just go over some of the things that I have to go over, the administrational items here, and then we'll jump in. And of course, I have to go over the risks involved in trading the financial markets. There is risk. I think we all know that by now. But it's all part of life, and it's part of trading. You just need to know what your risk is, how to control it as best as possible. And in trading, we do that by where we place our stop and our trade size. So those two things are how we can control it. And you kind of want to be careful on how much money you can afford to risk, not to really exceed 2% on any given trade is a good rule of thumb. However, all right, if 2% makes you even a little bit nervous, back it off a little bit so you can focus on what you need to focus on in order to have a good trading, relaxed trading environment. I think that's actually more important. And then, of course, try to get your wins to be at least twice as great as your risk. Also, too, I don't know your personal situation, so anything we talk about here that you're getting ready to act on, run those by your financial advisor or whoever manages your money. And past performance doesn't guarantee future performance. And I think probably we know we deal in a realm of probabilities when the trade the market. So I think that's kind of all set. All right, in terms of books, I've got a brand new book that's just out called The Art of Trading, published by Wiley. And it's 603 pages, basically covers everything. All right, so if you're looking for a book that will take you from A to Z, that's the book. And we'll put a link up in the recording below it, or you can just go to our website and go to books there. And then I've got other quick. I'm going to start with Customer Hub. So let me just bring that over to my screen. So a lot of people are wondering when they log into Customer Hub, if you had just joined us as a free member, we have a free area, free stuff we call it. You go up here and it's right here. Go to this little button here on the menu up here. So this is the navigation menu up here, and basically click on free stuff. And this is where it is. Okay, so you can download cheat sheets, business plans, risk control articles, trader scorecard that we have, record keeping forms so you can keep track of all your trades, free monthly updates, technology tips, and our YouTube channel. So everything we kind of put there in the free area so you can find it easily and access it. And we have a button here to our Discord and a button here to our YouTube. And if you're wondering about what computers to buy and what requirements, you can click here. So it's kind of cool. We do a free monthly update, which is just a very generalistic update on the markets. We do it once a month. It's not comprehensive like the More report, but we like to put that in there just so you have a little something there. And then up here, we can click to the website and click here for YouTube and the online store. So Customer Hub is that area where you log in. You can actually access it from the website. You log in using your username and password, okay? So that's available for you. And then also, too, once you get to Discord, here's my Discord over here. There is an icon here, all right, that depending on how many channels you have, here's one that says TradersCoach.com. So the first thing you want to do is click on that, all right, and then you have a whole list of menu items in here. Let me just use so all these are menus. These are all things that are on our Discord channel that you have access to. So you can start here and we go over, you can see who else has joined us. We got a lot of people joining, so that's all cool. And then we got social media links here. Risk disclosure, of course, we want you to see that, all right? And then announcements, if we have any announcements on things that we have coming out. General chat. Now, general chat is basically an area for you guys, okay? You can post, you can say hi to everybody. You can tell folks what particular market you're interested in, what you're trading today. You can even post a picture of your chart in there, okay? If you have any specific questions for us, you can put those in here. All right, suggestions or feedbacks is here. All right, and let's see, any trades, specific trades, you can put in there. P&Ls, payouts from prop firms, you can put those in there. Online store and free stuff, kind of like what was on Customer Hub, but here it is in Discord. Okay, so you go to free stuff and click on, there's a bunch of PDF files, and we have a zip file here too that contains a whole bunch of PDF files in it. So that's why it's in a zip file. Now, a little thing about zip files, whenever you download a zip file from Discord, or probably from most services these days, you get a warning that comes up and says, do you really want to download this? It could be dangerous, that kind of stuff. And the reason why that comes up is because they can't see what's inside the zip file. And I can assure you this zip file here is virus free and only contains the Trader's Assistant ledgers and cards in there. So you can have access to that for free. Download the zip file, and just when it says, are you sure you want to do it, you say yes, and you'll be all set, okay? Then we have other resources here. Here's something on that was kind of interesting I saw on the new NinjaTrader 8.1.6. I didn't do the video, but it talks to you about some of the things that are in it, which is kind of cool. Do's and don'ts, we have a little area where you can click on that, and feel free to add anything in there. Testimonials. As we said, we just started this, so we're brand new on this, and we want people to get involved in it. And then we have a coaching area and client support. So that's how it works, Gene. Hopefully I covered that. That's kind of what you want me to cover, right? Especially the free stuff.
Yeah, that's perfect. Yes,
Okay.
yes. And you can see all those little PDFs. You just click on those and download them from either Discord or from Customer Hub. And when you get my emails and you see, join the free VIP membership, just type in your name and your email into that form, and that will enable the free stuff tab to appear in your VIP membership.
Okay, cool. What I kind of wanted to talk about today a little bit is a concept that you can see regarding price structure on all charts and timeframes. And it's basically an accumulation, manipulation, distribution. Has anybody ever heard that before? And you can type in the chat area as well. The accumulation phase is usually a market that's trending sideways, kind of like that. And then what happens is it breaks out temporarily, only to reverse and come back down. And what happens is during the accumulation phase, okay, there's a lot of transactions going on. And then when it breaks out, all right, there's buying that goes on as well. So you've got a lot of people pumped up. And then what happens is it gets turned around and heads into a distribution phase. Now, this is a market maker's model, okay? And if you've ever heard of something called ICT or things like this, this is one of the models that they teach you. I think it's the 2022 model. But accumulation, you'll see that, all right? Manipulation and distribution. And what they also teach a little bit further is if you're a day trader trading like the NASDAQ or the ES, what you do is you look at the overnight session, and it can pretty much see the accumulation. And then when the market opens in New York, usually around 9:30, the model basically is the first run up is the manipulation. And if you've ever noticed during a market open, you see that violent move to the upside, only to stall out and move back down very dramatically. And that back down area usually will go to the low of like the London session or whatever the overnight low was in that area. And they're pretty precise about that. So that's where you hit your target. So usually it's one of those huge runs that occurs after the manipulation. Now, more specifically, the way in which you would, the way in which you would time this is when you see and not all patterns are perfect. They're going to be kind of messy. But the idea is when the market opens at 9:30. So let's say this left side is night. All right, so I just put night over here. And this is New York time day, okay? So when the market opens, and you'll have, this will be the Asian session. You'll have some highs and lows and, of the London session. So usually what happens is that when it opens up here, the first usual break is to take out one of these highs or lows. It's not always to the upside, all right? But my example, I'm just making it to the upside. So it takes out that high. Now, think about it. If you take out this high, you probably have people looking at that when the market opens as an area to buy, right? It's a breakout kind of. So is this here. So you've got a lot of buying that's going on here, which is what the manipulation phase is all about, drawing in the retail traders, all right? Then you get to a point where they've taken as much as they can in terms of liquidity, and then they bring it down, all right? Usually when they bring it down here, you'll get a fair value gap and so forth for possible entries when the market reverts back up. And the idea here is if you have a fair value gap here, I'll just put G, and a fair value gap is not necessarily one you can see in terms of a gap like you're thinking that you see on stocks. Usually it's 3 price bars, all right? And you have the bodies on these 3 price bars. We've gone over this before, okay, and a big body here. And so the fair value gap sits between here and here, even though you might not have any gap. That's not a very good drawing, but you get the idea. Even though you don't have any gap visibly seen between price bars, but you see it between the wicks of the first and third price bar. This would be the second. So it takes 3 price bars to form those types of gaps. And there's many different kinds, all right? But the idea is on this rebound up here, that's what you're looking for the market to reverse and head back down for the next leg, okay? And that's usually what you'll see in the distribution phase. And of course, if you're using the art software, you'll see a pyramid get drawn in here, okay? And then that's usually would be an entry for us here. Now, some people that trade just the fair value gaps may get in a little bit earlier based on if they have rejection from this fair value gap. And then the target is the low, okay, of the overnight low, usually on the London session. And this model, okay, reoccurs again during the day, usually twice a day. And you can see it, it's usually the accumulation, the manipulation, and the distribution. So think of the manipulation as the first breakout from a range, and you're all excited because it's pretty good. It looks pretty good because, it's usually has one big bar up, and then all of a sudden it peters out and fails and comes back usually into the range, kind of comes back up, and then once it fails again, then you're in the meat of the distribution range. One of the key things on the distribution range to keep in mind, whoops, did it again. One of the key things in the distribution range is that during that, I'll just draw it in fresh again, manipulation, distribution is one of the things you got to keep in mind. If you miss the good entry here, what you should do is take your fibs, okay, and you don't want to, as a general rule, if you're past the 50% range on this, in other words, if you're if you're in this lower half, okay, before a pull up here, and you missed getting in early up here, for example, if you're below the 50% mark on the fib here, all right, this is called the premium, this is the discount. And so it's always more risky when you get in the premium area. So most of the entries on the distribution range, you want to try to get in as soon as possible, as soon as you spot it, okay? And then set your stop above here, okay? That's how you would do it. So again, something like this, if you go up and you see a big pull down here, okay, and then a pull up, you can grab your fibs right here, and 50% if you can get in anywhere around here, that's good. And then once it drops down, all right, then you're in good shape, and it should hit whatever the low was overnight, okay? And believe me, it happened today on the NASDAQ. Okay, so I'm just going to open this chart up quite a bit, but when you're doing this, you also want to use multiple time frames here as well. But what I'm interested in is the in our area, it's 6:30, you know, so I'm on the West Coast, so it's 6:30 right here. Okay, so here's a great example of it. All right, so here is when the market opened. Okay, this is 6:30. Don't forget, I'm on the West Coast, so it might be 9:30. So here is the sideways motion. Okay, manipulation. Okay, distribution. All right, then once again, we had a sideways motion after that. But that is the key dip right here. Distribution, manipulation, and then distribution all the way up. And so here's the overnight lows ranging all the way back here, okay? So basically you would take that out here. All right, so you're pretty much guaranteed to get at least to the overnight high up here. And so that's kind of how you would do that. You had a fair value gap here, okay? You didn't have much of a pullback. Then later in the day, all right, you had a sideways motion here, okay? Here, you had a little bit of a pull up, all right? Pull up again, pull up, and then a move down, a retracement, there's the pyramids, and then a big move down, the distribution. So anytime you have a sideways pattern, okay, know that you may get a move up to the upside, to the edge, before the big move to the other side. And that's the accumulation, manipulation, and distribution. And you can see it over and over in the markets. Now, for those doing the ICT method, the kill zone is to about 10 o'clock Pacific time. So after that, they usually don't apply the model much more. All right, so that's I just wanted to show you that. I wanted to cover that today. This purple stuff here, these are all fair value gaps on different time frames that I look at. And you can certainly see that when you hit a fair value gap, the darker the color, the more time frames are involved. But you ever wonder why markets come to certain areas, stop, and go back up? No, it has to do with sweeping liquidity, for one thing, and also, two, where there is fair value gaps, even on higher time frames. Okay, so if you go over here on higher time frames, this is the 15-minute, and here we are over here. And so these price bars can generate fair value gaps, and that's what this software picks up on the current 1-minute time frame. If you're interested in this software, it is available on our website under the affiliates area. Okay, and you can send me an email at bennett@traderscoach.com if you want to learn more about it. So that's I do use that. I find it quite good for looking at areas of liquidity sweeps with fair value gaps. Okay. All right. And also for targets. All right. So if you have a deep purple area up here with a lot of liquidity sitting up here, chances are if it takes out liquidity here and we get a bounce off here and look at all the bullish fair value gaps, chances are you're going up here. Okay. And notice here, that when you get a pullback, you had another fair value gap, which was pink at this time, because that's based on lower time frames. In fact, this time frame right here, which is a 1 minute time frame, and notice how it stopped it right there. And then when you see it pull back up, pulls back and then higher, then chances are that's showing rejection and you're on your way up. So, markets don't move from one area to the other. They take a pause, they pull back, and then they resurge. But if you can kind of have an area by looking at where the major liquidity is for liquidity sweeps especially during intraday trading, that helps you know where the market is kind of headed, because the algos for the market is to search out price action, okay? Liquidity and price action. And so that's what it's all about, okay? So that's kind of where it heads usually to get that. All right, it's all about making trades. All right, if you're using NinjaTrader, you can upgrade to the latest update. And I put that also in our famous Discord channel. So that's in there.
Haha, Discord.
I know, right? All right, I think that's it then. Gene, you got any more?
No, that's it. I love hearing more about the price action. So that's great. Thanks for doing that.
Yeah, well, that's what the course is going to be all about. So we're going to be releasing that in November, late November. And it'll cover, things like bull flags, bear flags. It will cover fair value gaps, order blocks, breaker blocks, price structure, break in structure, change in structure. It will cover some ICT concepts, kind of like what we just covered today, but in more detail. A couple of the things that I find really helpful when I trade the financial markets that you can use on any time frame. Okay, it's not just subject to small time frames.
Awesome. Well, I know Clifton's here, and he texted me, and also, of course, Alexander. I'm not sure who else is here, but Clifton, do you have any questions or?
No questions today.
Okay, hi Cliff, how are you doing?
I'm doing all right.
Good to hear your voice again.
Yep. Thanks.
All right, we're going to be doing another tutorial, I think. And when are we doing that one, Gene? In the spring?
Let's see. Yes, in the spring. Have it down for January 25th, 26th.
Oh, that's winter. Okay.
Oh, well.
All right. Okay.
I'll try to beat it.
All right.
That'd be great. That'd be great.
So. We'll let you guys know when that is. So keep your eyes open for an email on the course. Gene, when do you think you're going to be sending that out? Because I know
next week. Yeah, next week I've got a whole queued up thing ready to go.
Okay, so keep an eye on that. If you don't get it, let us know. But next week you should get that. And I think that's it for today then. All right, thank you for being here, everybody.
Yeah, great to see everybody.
Okay, you guys take care. All right, thank you.
Serving traders worldwide since 1998, TradersCoach.com provides educational services for traders and investors alike. We have developed trading software to help traders of every level improve their skills. Our site is dedicated to providing you with all the resources, software, and educational material you need to achieve your trading goals. It is because of our years of experience, attention to detail, and our exceptional customer service that TradersCoach.com is the right choice for you. Call us today.